Hey there, YouTube. It's been a while since the last video. We've had a lot of interesting things hitting the market. Had a long period of stagnation, basically since October, late last year. Had some new highs this year in January, but it's mainly been stalled out. So it's been an interesting time. I've been focused on the community aspect in the Discord, and we're building quite a lot of neat things in there and having some great discussions. So apologies for the tardiness of the YouTube channel. So let's dive right in. Where are we at? So this is kind of my one of my main market dashboards here, and a couple of key aspects is the yearly volume profile, which is over here on the right hand side. And I also have a custom volume study down here, tracks what I would say are strong peaks and dips in the volume by time. And I also have a couple of breadth indicators down here. So I also have one that's not on display but is doing the bar coloring, and it's also providing the volume regime based outlook and bias for the year. So it's looking 250 candles back, rolling. And so let's dive right in. So last April in 2025, I pointed out a potential bottom using a handful of tools. The article I wrote on X will go over some of those. And what I'm starting to see is that we're starting to potentially get to a point where perhaps we'd have a similar situation to April. However, nothing's guaranteed. And I think we're still a bit premature. So the slowest trend for the S&P 100 top holdings is starting to hit this 40 level here on this indicator I put together called PotBot, which is mainly used for looking for potential bottoms, hence the name. So it's comprising two different measures, a fast and a slow measurement of breadth. And this one in particular, we're looking at the S&P 100. You can configure different markets. And looking here, back in April, where I called out a potential bottom, is very near to what we're headed at now. So every time the fast trend, which is this brighter neon green kind of line, this one here, pretty decent at finding local bottoms. Maybe nothing too big, but local for sure. And you can see every time that we had a local bottom, because the breadth, basically the stocks being oversold, quote unquote, potential, met with a pretty large volume deposit. And so that was something I was relying on here over the past couple of dips that we had to find potential local bottoms. Local bottoms I refer to basically as nothing huge from a retracement or like a crash type scenario. This is just 2.5, not quite 3%. So that's really nothing. And so that's a local bottom for me. And you can see the slow trend of breadth for the S&P 100 has been nearly just at a crawl. No real advancement of any kind, basically just been flat, and really started to shrink as we headed into February. Certainly late February, we flipped that March timeframe. So come back over here and you can see just how incredibly strong the breadth was back after that Liberation Day run that we had, this amazing run. So that's what I'm watching from a breadth perspective. I'm also seeing lots of disruption considering the AI craze that has been taking the world by storm. And we're seeing a lot of different stocks pulling back because the market is trying to price in AI related impacts. A lot of white collar jobs and button pushers. Lots of different jobs are going to be disrupted potentially by AI. So you can really see the market starting to price or reprice everything. And the things that are holding very well is energies, materials, utilities, industrials, whatnot. So you can see a lot of these sectors are really heavy, and a lot of the other ones where AI could have potential broad, sweeping impacts are seeing major pullbacks. We definitely have some companies from their all-time highs that have pulled back 50% or more. I mean, it's kind of a interesting time in the market where we have some stocks that are making new all-time highs all the time, and then we have some other ones that used to be quite the heavy hitter in the market, and they're basically have been halved since this whole thing. So what I'm watching for now is the breadth here. I'm always watching breadth, and we had some interesting structure. I think it was back around March, early March. We started to really push down, down, down. Started to see the fast trend of breadth ever decreasing until March 9th. We hit a low here, and we bounced off of the 2025 point of control based on the volume profile here. It's the price that has the highest volume for the entire year. So I had given my community my outlook, which was, I don't think that the low is in, but I would not be surprised if there was a bounce up into some other area profile. We could have made it all the way to this higher volume area, or we could have flushed after a quick check here back below and even lower. So that's effectively what happened. We did actually breach into the higher volume area here, and then after rejecting that, we have went right through the point of control. You can see on this day here, these past like 3 days, I mean, there was no ifs, ands, or buts about it. We just went right on through, no resistance seen. And then here's where we're at now. So let the profile reload. So we have another low volume area on SPY from 2025, and that's where we're at, where we closed at here on last Friday, March 20th, right in this low volume area. And we kind of wicked this particular price here. So it's not the point of control, but it's certainly a strong price where a lot of volume was traded. And that's kind of what I'm wanting to see is we got this big volume deposit here, hence the dot from my lower volume study indicator. And so yet again, we're seeing a point of high volume deposit. We're seeing the breadth somewhat bottomed out here potentially. It can go lower. We had that back here and in some other instances. So that's what I'm looking to see is that volume that was deposited. Is that panic at the lows, or is that like in previous times where we're seeing some higher volume and potentially a reversal? Obviously, the news is full of FUD. There's a lot of chatter on social media regarding all the different reasons this could be the bottom, or it could be the start of something much more grievous. So we'll just have to play it day by day. That's what I'm doing. From a TWAP monthly ranges standpoint, so of course I've not published in a while, but if you've watched some of my older videos, I cover this all the time. And this indicator is, if you've not seen, is looking at tick weighted average price, the New York Stock Exchange tick. And I project these over the course of a month, sometimes a week or a day. In this case, this layout, the bands are for the current monthly tick weighted average price. The pink lines are daily, so these reset every day. And then the orange horizontal lines are the ending values of the bands from the prior month projected over the current. So that's what we're looking at here. And one thing to note is that the way I approach these is the particular area here. This would be that first deviation area. That's what I consider more of a chop zone. However, if we are underneath this midline, then that is what I consider a bearish bias. So as long as we're under here and we're not too far and stretched below, then I will consider any of my bearish signals as being an entry for a short position in alignment to this. So we can see that at the beginning of March, we had really no strength above this midpoint. March 4th, Wednesday, we clustered above it and never really did much with that. Next day, we continued even lower. So the bearish bias strengthens. You can almost think of this as a gradient the further we head out. Anybody looking at this hopefully can see that we're far below that now. We're really far below. And this has definitely happened in bearish markets. This move has been pretty decent from a speed standpoint. Once March took off, we spent numerous weeks, months, 119 days trading the same, 120 days trading the same price on SPY. That's nearly half a year. 250 trading days, almost half a year. I mean, you could argue it's basically half a trading year's worth of sessions trading in the same area. Talk about boring. So this has been pretty interesting, because as soon as we cut into March, we really finally we're just selling off pretty much straight down in 23 days, about 7%. So I think that's why we're in this situation where we're not. We had a very tight set of TWAP range, monthly TWAP ranges, these orange lines here, and we've just breached them and kind of moving further and further down here. So we're really close to the third deviation on the monthly, and we've got not a whole lot of time left before we start April. So should be interesting. Hopefully, in my opinion, hopefully March is kind of the end of the selling, and by the spring and summer months, we'll start to see some relief. But I look at the charts to make that decision. I try not to make that decision. One thing I can tell you, if you've been a longtime viewer of this channel, you know about MIT, and you know about the TWAP ranges indicator that I have published. I also shared a free layout with my setup, kind of how I like to reference it throughout the day. TWAP ranges, and I kind of have it colored. And this setup has been like phenomenal. The community loves this setup, finds lots of futures or option scalps off of this, and in this third deviation line on either end has produced some crazy results. So that is yet again just another reminder to check that out. It's completely free. You just apply it to your charts and take a look at it. Anything below the third deviation is heavy bearish bias potential, especially when we start inside and we break through. So a little bit of a slow Friday, but boy, when you use this range to build your bias for the day, things definitely become a lot clearer. And this whole week, anytime we've had any kind of headline regarding oil situation or the Strait or Trump or anything, we get these heavy tick deposits, and they never really sustain. They never really hold any ground. I mean, this was immediately sold off, gap down overnight. Just nothing can bring the buyer's interest, it would seem. So it's been very interesting to watch these tick deposits and what they are able to establish as far as price is concerned. So I also have the tick levels indicator. That's definitely something to maybe take a look at. It's an oldie but a goodie, as they say. So you can watch these tick deposits and see like who's winning the war here. I guess maybe poor choice of words, but see where they deposit the price and then what happens afterwards. And you'll often see these areas of tick being revisited. Like here, see, we bounce off of that one, we create that one. These levels are pretty darn good. So I encourage you to utilize the data in all sorts of ways and make your own determinations, of course. I'm no financial expert or advisor or anything of that kind, but here was a great particular instance where we're printing, just as I used to talk about all the time, 800 to 1,000 tick range. Here's a perfect little spike right up in the TWAP, and this whole area here just kind of becomes that really nice confluence spot where we're retesting TWAP, we're retesting the third deviation line, we're retesting this tick area, right before we reject and really take off. And it's not far off of that 12:30, 1:30 time, and we really just head down for quite a sell-off by the time this took off. I mean, this is decent, a little over 1% move, so that's nothing to scoff at. And lots of heavy tick here that is sustained. See, that's the big thing, is when you see the tick, is it immediately reverted or is it sustained? And here you can see none of this tick was retested, hardly at all. It's just a bunch of selling. So, of course, I think a lot of X talked about this particular spot down here, which I personally find interesting overall. So that's my update. Definitely feel free to join the Discord. It's completely free. You can find my pinned post on X to get the invite link. Love to have more people that are interested in the markets and have educated opinions and would like to have educated discussions. So hopefully you're all doing well. Hope you've been surviving the past couple of months. And as always, happy trading. Thanks for watching.